following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We're going to get right into the dollar here. Man, the bounce did happen, and it hasn't stopped yet. 99.63.64. So that's the weekly view. That's the big area we talked about. And then we talked about yesterday not being able to really get short this again until we got below 165. That didn't happen yesterday. Didn't happen the day before. Definitely don't have a stake in the ground with a close back in the profile here. So all bets are off on this one right now. I'm not really looking at it from the long side too much right now. This obviously affected some other currencies, relationships, that is. So we're going to take a look at those. But again, just kind of spun around up here above the profiles, never dived back in. Talked about looking at that from the short side and revisiting those lower numbers, 99.60 and some change. If we had were able to dive back in the box, that hasn't happened. So, So let's take a look at the euro. Talked about this one possibly being a bounce situation down here, 105.60 to 105.85. We've eclipsed both those now. This trade's in danger. Stop out for me. Rarely do I, and this is what I get for trying to buy the euro. Rarely do I get too happy about trying to buy a bounce on the euro, and stop outs in order on this one, of course, now. So we're getting outside the profile. A weekly close outside here would be pretty ugly. But, still looking at that dollar as the guiding light for everything. And that has not started to migrate down below that level that we just talked about, 170 and some change here. So Euro's looking kind of ugly here, and now it's kind of a wait and see. You can always get back in the trade, and it's kind of tough to get, sell something and then buy it again higher. But sometimes that's what you have to do as a trader, and it doesn't just in normal social transactions, you don't want to sell something lower and buy something higher. But sometimes you have to do that when it goes to stopping out yourself from a bad situation, and then when things kind of ripen up again, that's sometimes the mechanism in trading. So keep that in mind. You don't have to always try to buy something lower. All right. Looking at the pound, obviously a little bit of a reaction here relative to what the dollar's doing. But I like how this thing's hanging in here, and I actually like buying breakouts above 125.39 on the pound. So that's just kind of going to be a wait and see. You had some pretty good support here to move higher. And now that's a little bit in danger. The yen trade, talked about being long the yen in that kind of balancing side with the dollar. How do you trade the yen more efficiently? So this is what's going on with the yen. Didn't expect this to climb as high as it's climbed already, as we're seeing, and that's the same for the dollar. But you do have some resistance, 115.17 on the yen. That'll be an area I think you can bank some shorts against. Top of the mountain, if you will, on the POC there. I've got my Masters shirt on today. If you've never been down there, that's a pretty cool scene if you can get in there. I heard the tickets are pretty hard to get. I got really lucky. I've been down there like 5 or 6 times, and I ended up, one of my best friends is from Augusta, Georgia, and his family, believe it or not, has been getting 4 tickets to that thing since, I want to say, the 60s or the 70s, kind of grandfathered in. So, he just throws it out there, and I say, yeah, sure, I'll drop down. It's not that big of a deal to me, but I heard it's a big deal. Anyway, taking a look at the Aussie dollar. Now, this is one we talked about a little bit of a lid here. Got to look at taking some off yesterday around 76.96, but I fully believe this thing's going to go a lot higher. I love the way this thing is acting relative to what the dollar's doing, even though it's not a component of the dollar, and what some of the other global currencies are doing right now. I'm full on ready to buy massive breakouts above 76.96 or 77 on the Aussie dollar. Very decent looking trade here. Really like how it's acting. China. Kind of first sign here that it's time to start looking at taking some weight off. We had that yellow bar, that peel back that you'll see in the scanner if you have the scanner. And let's take a look at the S&Ps. Can I say the S&Ps are down? Is that even possible? Yeah, I think they're down. They're down almost 2 points. Wow. The Dow's down. The Dow futures are down. Is that right? I guess they're up. Anyway. So a massive sell-off is happening this morning. We're down 1.5 points in the S&Ps. So the launching pad action that happened here, here's the 240s. Kind of explored that the previous day, ramped up again. So how do you trade this? Here's the 60-minute on the S&Ps. Now, I actually think that sometimes too high is too high, but you've got to look at some technical damage that is available to you by looking around, listening to some of the hosts on TFNN and trying to figure out if there are some cracks in the armor on the internals. And I'll tell you this from looking at the scanner, there's no cracks in the armor, but we do have some overextended modes right now and some time frames in breadth calculations. So what does that mean? That means that a lot of stocks in these underlying two indices, the NASDAQ and the S&P, have really, really overextended themselves. So I think the trade possibly today, believe it or not, is putting stops. I haven't talked about going against this move at all since it started happening. And that was that breakout way back when. But if you look at this and you're kind of looking at those indicators I just spoke of about the internals, and you're looking at this big wide profile on a 60-minute, I can't believe we're talking about 60-minute profiles. We more than likely deserve to come back at least into this 23, 28, 29, and I know that's not something to write home about. What is that, like 5 or 6 points from here? But you got a chance to play defense. You got above the box to this morning, last night. You dive back in, and I think we could retrace back at least into that area. And then you got to start looking at the other time frames. You've got that support around that same area, the bottom of the profile in the 60s. You do the top on the 240. So we're going to talk about this a little bit more when we come back, and maybe the S&Ps might come off a little bit.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were talking about the S&Ps going into a full-blown 6-point crash pullback before we left, if you remember that. Should be a day you should write down. 23.29, along with 23.29 on the 60 and the 240. It feels like we want to pull back magnetically to that area finally, and I know that that's kind of going against the long-term rules here, but I think you got a little trading opportunity based on some things I've seen in the scanner, the breadth calculations, which haven't really been twisted on that level until now. So don't put on a short and forget about it, by the way, but just we got a little opportunity here. And on this show I probably try to fly through too many usual suspects too quickly. I'm just trying to get you guys prepared for what I feel a lot of the market participants are looking at other than just the U.S. stock market itself. And a lot of the things we talk about on this show, I really don't think you can get anywhere else out there looking at any free indicator or any, canned stuff on eSignal or TradeStation or any of those places. So I love to get questions. You guys should call in, ask them in the den, because sometimes it spurs some great conversations that I think everybody can benefit from. Take a look at gold. This is one that I think we do have a caller right now. Victor, are you there?
Yeah, how you doing? Yeah,
doing okay.
I was looking at Groupon, the earnings come out tonight. And
Okay.
Another thing, gold is at the same price it was last February 14th, and then it dumped off. You know what I mean? Right after Valentine's Day. So I think you're going down to 800 still on gold. I don't see how it can go up.
Okay.
But give me Groupon when you get a chance.
Yeah, Groupon. So this is the long-term weekly here, and obviously I think we're trading about 4 this morning. I might be a little delayed on my quotes on the New York. I got to make sure I pay my homage bill to eSignal to make sure it's live always. They treat me as a professional for some reason, so they jack up all the fees over there. So 347's that floor here. So 418 is the top of the profile on the weekly. Are you already in this, or are you thinking about getting into it?
No, I see a lot of buy signals, and their earnings come out tonight, so I don't know. I don't know if it's a
Right.
pump and dump or what.
Yeah, that could be the case. This is kind of a stock that is showing some good technical reasons to buy it right now, like as if it may explore the entire fair auction up to 418. But if it's kind of a storied situation right now, you may have better things to put your mental capital towards than this one. But I mean, it has put in a floor. I like how it's gotten away from these unparalleled lows on the profiles here at 350, and 418 would probably be wishful thinking on that. So if you get into it, 418 would probably be the target there.
Okay.
Can we talk about gold a little bit? Because I just briefly kind of hit on it before, and I've been talking about it a lot.
Nothing in a year. I think it's on the way back down to 800, because if you hit 200, you go to 19. You look at a 20, 30-year chart on that, I think you're going to get burned on gold. Big time.
Yeah. The only thing I would say converse to that would be I love how this thing has acted relative. This is our weekly on gold relative to what the dollar has been doing, and also not really wanting to come off these weekly unfair highs. So
dollar's up today. It's almost up to where it was on January 1st, 102.46.
Correct, and I'm not in it, unfortunately. But as you look at gold and you look at that dollar move, this is, we had talked about a decent little trading opportunity 2 days ago in this 1219, 1220 area down here.
Right.
I like how gold is planing off up here. It's not wanting to get away from these weekly and unfair highs, and I love how it's showing itself even more so with the dollar climbing, and should have more than, in normal courses of action. If gold was weak, it would be looking for any reason to sell off, and the dollar rallying would be that reason, and it's not selling off. So, and gold can fake me out and everybody else. Don't get me wrong, you got to put your stops in. But I think you've got a nice little situation here to put stops below 1218 and a half and let this thing explode and just run everybody out of town, everybody covers some shorts, and this thing, may see 1300. That's the way I'm looking at it.
What's the price of palladium, though? Isn't it dirt cheap right now, like $7.84 an ounce or something?
I haven't looked at palladium. I don't know if we got a few. Let me see if I can.
Well, I'm just saying, what's that other commodity that's really expensive? The metal, palladium, or the other one that go up? Russia controls it all. What's that called? Platinum or whatever. Someone trading 748.
Plutonium. Just kidding.
Yeah, plutonium or platinum. They're all trading cheap right now. Even silver's going back now.
Yeah, well, let's pull up silver and take a look at it really quick.
And you got option expirations this week.
See, I like
do you want
the
to
way
hold it over a 3-day weekend?
Silver and gold?
Yeah, do you want to hold it over the weekend when who knows what China's going to do with their gold?
Well, these type of plays that I'm talking about, I'm a terrified trader a lot of times, Victor, so I like to wrap an option hedge around it, especially if I feel like we're going to have a big move. So therefore, over a weekend and holding it overnight, and it's not worth it to do that. You just trade lighter and put your stops in if you don't do these option hedges, because if you're not expecting a big move, a hedge is kind of pointless, and it actually
is nugget and dust are just burn factors. There's a lot of burn factors in those things.
Well, Tom probably knows more about.
Yeah.
Tom's probably got more, insightful information about stuff like that. I'm just kind of looking at the technicals here, and I'm looking at the relationships. I love these two products to go higher, and I love gold running people completely out of town on the short side here. So a lot of people are thinking like you're thinking, by the way, and that's another kind of indicator in itself. So.
All right.
All right. Okay. Thanks for calling. All right. Good call. I don't really look too deeply into the fundamentals of gold. I just kind of look at quick views. Don't try to. The deeper I get into trades sometimes, and how far you go down the rabbit hole of what if scenarios and fundamental news, For me, and there's some very smart people that make a lot of money really doing a lot of research fundamentally, and Tom puts out an insane good gold letter without question. But for me, I start getting married to things kind of mentally when I start having deep convictions about things that should happen instead of things that are happening. And it's just something that, I've learned to kind of be a little light on the fundamentals. That's just kind of my take on it. Yeah, exactly. So we're going to be right back. Stay tuned.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I was telling people in the den, I hope they don't mind, but I'm obviously wearing my commie colors today. Didn't realize how commie it looked till I looked at the video a while ago. Let's take a look at the 10-year. Now, all right, so you got to figure, and there's going to, just think about what's happening here. The market is up incredibly, for the last, let's see, when did we get that breakout? And then we're going to talk about the 10-year. So the weekly, that breakout happened 2100. So from the bottom of the November 7th, November 8th, we're up about 15% from the very bottom. Actually, a little bit higher now. But even recently, the breakout above unfair highs. I mean, we just have just this is a moonshot. So you got to be thinking, some people, okay, wow, everybody's getting richer. I know you guys have already thought about this, but everybody who's got investments, which is half the U.S. at least, is going to beat in their chest, possibly going to Best Buys, buying a new car, blah, blah, blah. And, this is kind of reaching for products probably. And that's one of the things to think about. And then you're talking about, why would rates stay low? There's about 100 other factors going on here, but the 10-year is just getting hammered. We got a report out this morning. But I've been talking about, these things not really being directional, not really, no edge at all. The 30-year is kind of coming back down into support on the weekly. This is 149 approximately. Let's take a look at the 10-year. The weekly unfair lows on the 10-year are at kind of relatively similar place, 123.10. In my opinion, we should have already, the Treasury guys should have already been kind of looking at this a little more short-minded, and they're not. And, if you can't get the notes and the bonds to sell off in a situation like this, all things considered, I still think there's something, not really directionally tradable right now. So still staying away from this. I just don't have any edge on it. I'd hate to get caught trying to short things, trying to make sense here on rates, and then it just go in my face straight up. I just don't want that to happen. And I don't see an edge here in trading treasuries still. And they'll probably go down 10 more handles, and I'll still be saying that. But gold's coming off a little bit on that report. 12.18, 12.19 is another, just the same buy point on gold. Just reminding you guys of that. Copper. Yeah, P is saying in the den there's quite a few factors. There's 1,000 factors to factor in when you're talking about trading treasuries, and you can really overthink these things. But technically speaking, try to keep it simple when you're trading treasuries, because there are a zillion variables to kind of keep in mind fundamentally. And one of those I was just kind of throwing out there. Prices may go up, rates may go higher based on that alone, and treasuries may sell off. Here's copper. All right, so this is the March contract. Yep. So this is the weekly, and this is the daily. So normally, and yesterday we had a pretty decent reversal. This is the daily unfair high. So you've still got some kind of support here on the daily, but I think the more important thing to look at on copper, which I don't think copper really should be selling off in this environment right now. I think we're probably just going to base around the highs again and do another move up. Forget the mine problems and everything else. 2.7530 is kind of the line in the sand now on the weekly unfair highs. If we start breaking down below 2.7170, then I think you could start seeing some lower numbers. But right now we're just kind of hovering around those weekly unfair highs. I would consider this noise. If we get a stake in the ground below those numbers I just spoke of on the daily, then I think you could actually consider this a reversal, but not yet. So I'm still not a fan of even classically speaking, when you kind of get a close above and then you get a reverse like that back in the profile, that's a pretty strong signal to reverse the whole trade. But I just don't see that yet in copper. It's one of the harder instruments to trade on the planet is the notes and bonds. And right now, they're, in my opinion, they should be trading a lot lower, and they're not. So that's, again, it is what it is. It doesn't have to be trading lower. Taking a look at crude. Hadn't hit on this morning. Dollar rallying. I still love this trade from the long side. Here's the weekly. Not a lot of change there. You know where to put the stops. 52.32, 52.20, 24. Still really like this trade from the long side. Let's take a look at the XLE, by the way. All right, so how cool is this? Let me get the weekly up here. I don't know why eSignal does that. All right, so here's the XLE. Let's see where we're at this morning. Looks like 73.50. Looks like a good print there. So clearing some daily congestion here, possibly kind of right up against a weekly. I'm pretty bullish on crude oil right now. So you could look at some stocks that are strong in the scanner, in the XLE, and start trading relative strength on those in that sector relative to everything I just said. It's much easier to do that, in my opinion, much higher odds than trying to find things on sale in the XLE. It's kind of polar opposite of trying to, buy things on sale. It's a much easier game to play. I've always found that to be the case. Oh, we have Larry from Wyoming. Larry, you there?
Yeah. How you doing, John?
Good. How long have you been on the hold? I'm sorry, I didn't see that.
No, just a few seconds, really.
Okay. How you doing?
I'm good. How's weather there?
It's actually kind of nice. I actually was able to put some things in the ground last 2 weeks here, just some cold weather crops. How's your weather?
Well, we're finally getting a break, and we've had some pretty cold extremes here, but it's, I chose to retire here. I like it.
Great.
Cheyenne.
Can you hang through the break here? Because we got to go.
Yeah, sure.
Okay, great. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We've got a caller on the line. Larry, are you still there?
Yeah, I'm here, John. Yep.
Okay. What's on your mind?
Okay. Well, it's about the issue EEM, emerging markets. And I see a nice Gartley cell forming on the monthly, and I was kind of curious about some TAS levels because volume on this thing is rapidly diminishing, and you know how tough it is to know the moment to take a short.
Yeah.
And I was wondering if you saw anything. It looks above your TAS weekly. Oh. Yeah.
Well, probably the smart thing to do here, Larry, is to just wait. Just like I forgot what we were just looking at copper. I don't know if you were listening to that, but if you can get kind of reversals back into the profile, then you've kind of got a nice stake in the ground to just play defense against. And that action in itself means that, hey, we've kind of found our limits, and people have kind of rejected, as Tom would say, rejected that price. So right now, that would probably be the smart play. And if you're looking at a long-term trade on this, I mean, you definitely need to more than likely let somebody else figure out the high print instead of you trying to figure it out. I've always just, wrecked my own personal account trying to think that things were too high or too low back in the old days, and I still make that mistake sometimes. I mean, I'm not immune to it. Just want you to know that everybody's human. But letting this thing technically kind of do what it's supposed to give you a little bit better odds. And if it doesn't happen, it doesn't happen. And therefore, you just kind of like on Apple. I don't know if you've listened to me on Apple. I wasn't the most bullish guy in the world on Apple, but I was hoping that we could get a reversal. God, a month or two ago, back below, and I remember the price like it was. It's etched in my brain. I think it was 114.72, something like that. And if we'd have kind of gotten a reversal back below those weekly and fair highs, it would have been okay to be short for a little bit or try something. That never happened, and therefore I didn't get long because I was kind of looking for that. Kind of horse got out of the barn and was off to the races. But the good news is on that is you never really were in a situation where you were shorting it based on that concept. So I think, sometimes it's really difficult to just sit here and watch this stuff, and I'm aware of that. I mean, these lights are blinking, and there's maybe it's cold outside, and you're staying inside looking at this stuff. It's difficult to do nothing, but I think you just got to wait until that feature happens, and that's
why I called. I mean, there has been some talk of shorting EEM here, and I don't see, even if you just use expansion theory, on the weekly, we have not completed a 1-to-1. We haven't hit that gap of July 6th. So yeah, and we definitely don't have a reversal candle on daily, weekly, or monthly. So I think your advice is good. Yeah.
Yeah, it's a lot of things too. Like I never get glued into one thing and kind of say, "Oh, God, you know what? I got to beat this thing personally." That's dangerous. And yeah, you know what I'm talking about.
Oh, believe me.
Yeah. So it's good to kind of.
All right.
You know, just trading one-on-one stuff. Don't get totally glued in. If it happens, it happens. You can probably set up an alert on your platform that you're using to let you know when things like that are happening. And then gaze over and take a look at it. And it's a part of the game, or part of the plan is to just kind of spread the risk out a little bit.
That's why I called, John. I just, you hear the things and you just start focusing, and it just doesn't look ready to me. No, I agree. Okay. Well, I appreciate that wisdom. Yeah.
Thanks. Well, thanks for calling in, man. It's a joy to talk to somebody from out that way. Okay. Thank you. Okay. So going back to gold, if based on what we were talking about before, you've got kind of playing around here in the middle of the fair auction earlier. Now you've got a chance to play defense and increase the risk rewards around this unfair low on the daily. All right, and taking a look at the dollar. Again, making a moonshot up, and gold really just kind of coming back to support. This is the way I'm looking at gold right now. I love how it's acting. I love this, launch that the dollar's done, and then gold kind of showing itself and saying, hey, wow. So these are the type of relativity situations that I like, and at the same time, you've got a chance to play defense, more importantly. So that's the deal. We talked about the S&Ps earlier in the show, pretty much right on the opening. Talked about the breadth situation, and I'm going to pull this up here really quick. I think I can get my scanner up. I went back to the old version because we still haven't released this new one, which I've been... Okay. Got somebody else's login here. I was testing something. I just want to show you what I was talking about earlier relative to the breast situations. So it's going to take a bit to populate. Still retrieving historical data, but I wanted you to look at some overextended situations here that are starting to show themselves. And at the same time, yesterday, here we go. Now, this is something you just do not get anywhere else. All right, this is our daily. See this green thing up here? That's 63%. Now, when we get into these pretty high numbers here, you've got to look at, where's the middle ground relative to this, all that. And I'm talking about overextensions right now. So at the same time, even making those moves up, that more importantly, and this is why I'm looking at a possible retracement finally in the S&Ps. And again, take what the market gives you on these pullbacks if they happen. Remember, there's a lot of people short this market, and they're any type of pullback, they're, oh God, finally I can get out of this. So you're going to have a little bit of that action too. But we had literally on the close yesterday, which is pretty unbelievable actually, with another move up. We had 8.32%, 42 stocks in the S&P showing new supply areas attempting to appear, and that's actually going to happen this morning. So this is information you do not get anywhere else, and these overextensions are I don't like to try to trade overextensions a lot. They don't happen too often, but when that happens, then you're looking for areas to play defense. This is, again, the 60-minute, not super important time frame, but we talked about being able to play defense above 23.38 this morning, and then you got some targets, 240 unfair highs, 60-minute unfair lows, just for short-term guys. And I think we actually might have some more follow-through here, but you got initial targets 23, 28, 29. I feel okay about this. And if you look at these weekly and daily charts and you listen to what Larry and I were speaking about before, it's like, where's the technical damage here, Logan? We'll talk about this a little bit more when we come back, and that EEM kind of reference that we talked about a couple of minutes ago. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So we're talking about the S&Ps and talking about some of those overextended situations and new profiles attempting to appear on the dailies here, all at least relaxing situations for a massive rally up, bare minimum. We talked about 28, 29 down below targets on this, playing defense above 23, 37, 38. Feel okay about this. This market's had a massive run, and we're starting to see some reasons finally to start looking at it from the other side. And here's the daily bar. Now, normally, even talking about, I think it was EEM, was that the, yeah. We were talking about this with the caller earlier, Larry from Wyoming, and just kind of waiting until you see some technical reasons to start jumping on the bandwagon here. Not there yet, but that being said, when I go into the S&Ps, you might be going, well, where's the technical reasons here? My God, this thing, you have nothing going on the weekly and daily. But looking at that breadth calculation and looking at a little bit lower time frame, there is somewhat of and has been somewhat of a reason to maybe have the massive 10-point pullback crash in the S&Ps. I get these updates from Dunham Sporting Goods. I don't know if you guys are on a mailing list, but I walked into that store the other day. They got one locally here. There are some incredibly powerful air guns. I mean, shooting pellets faster than 22 bullets. I mean, these things are unbelievable. I can't believe you can walk in there and get one of those things just like that. It's like found a way around a few things there. Just popped up on my screen. All right, just to recap. Gold, still think you got a nice little situation here around 1218, 1219 for a trading opportunity. Targets up top again. Initially will be 1236. It's not a bad risk reward if you can kind of, again, wait for the market to come to you to pick a battle around a high probability entry area. The XLF. Ooh. You knew this was going to happen. We also talked about buying the strong of the strong. So let's just migrate over to one of the strong that we've been talking about. I haven't looked at this morning, but I could probably bet that So American Express, again, this is a case in point on the XLE situation. Same concept. Let me go over here to the XLE in the scanner. Like an old friend. There's the XLE. So not the most powerful breadth situation. I expect crude to move up. So when you're looking at trying to trade crude, it might be a lot easier to go into the XLE and just find strong stocks relative to profiles, be able to bank some, defensive situations against some of the profiles. Let's look at let's take a look at this one. Nah, we're not going to look at that one. Let's take a look at let me look at the setup that might be pretty cool. FTI. Nah. Well, this one looks pretty interesting. FTI, as you can see this week, kind of reversed back up in the profiles, kind of that same opposite reaction we were looking for in the EEM earlier. But right now, I know it's not been the strongest oil stock lately, but you've got a stock that's been an uptrend. You've got a situation on support here, 32. Keep your eye on FTI. Stay tuned for Larry, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.